Ongoing tensions with North Korea spooking investors as stocks fell for the second straight day. Joining me to discuss is Kevin Kelly, managing partner at Kelly & Company. How many times can I say Kevin Kelly?
It's great. It's got a nice ring to it. I like it.
Listen, this is true. People have been spooked by these headlines out of North Korea, and they have sold off, but it's not a huge sell-off, right?
Yeah, it's not a huge sell-off, and the market is trying to focus on, what else is coming out of the news cycle. I mean, earnings are almost over. The earnings
Where do we go next?
Yeah,
right?
exactly. Where do we go next? And that's what happens in August, September. Earnings are done, so people focus on macro events, but they realize the whole North Korea situation will probably be contained. Because we saw China's actions earlier this year where they cut off coal, right? So
well, we've got a long way to go on that sanctions story, but I agree with you. I think the market's reaction is interesting and should give people some kind of pause, should make them feel better about the situation.
Correct.
I want to move on to earnings. We've had Disney come in, and they had some interesting headlines, most notably launching their own streaming platform and getting out on Netflix. What do you think of that?
I think it's pretty interesting because what happens when you think about companies like Disney and Netflix, the stocks don't trade with their brand equity, and Disney realizes they need to unlock that. They can no longer give the keys to the castle away, right?
They're trading down again today.
Yeah, they are trading down again today because they haven't really figured this out. I mean, they're behind the curve. Netflix has created its own content, right, that people are subscribing to their platform. Meanwhile, they're carrying Disney content. So that's why both of them really sold off in unison, because it may become a fight where everyone's hoarding their own content, no longer licensing that out. What does that mean to cash flow?
Somebody finally likes content.
Yeah.
At the end of the day,
Correct.
ESPN also a big part of the story here.
Yeah.
Fascinating how ESPN was considered the most single important thing in the world in television, and now not so much.
Do you want to know the most important stat? It's that ESPN makes double the revenue when you combine Lucasfilm, which is Star Wars, as well as Marvel, as well as their parks and resorts. So it is the cash cow. It is the golden goose.
But not so much right now.
No, they can't figure it out. They've lost 10 million subscribers so far, and it keeps happening precipitously because the way we consume content, we're a binge on demand. And sports seasons are longer, and there's so many bowl games. People don't want to consume that content. We want shorter, faster, longer, on demand, and so that's why they're coming out with their own platform.
Yeah. Hockey is fast.
Exactly. And there's fights.
That's true. 21st Century Fox out with earnings, the parent of this network. Pretty good results here. An EPS beat, a revenue miss, all in looking pretty good. What did you make of that report?
What I made of it is it shows how a lot of these entertainment platforms and companies trade, right? I mean, they had a one-off situation that they attributed to revenue miss. It was Deadpool, but Deadpool 2 is coming out. So it's leveraging sort of known brands, content that are in the marketplace right now. And the interesting thing was on the call when you had James Murdoch talk about, yeah, they're actually looking at a direct-to-consumer platform just like Disney is. So the future may be DTC, direct-to-consumer. That's how we're consuming content.